So potentially a pretty huge week coming up, particularly when we're talking about FX markets, because obviously we have the ECB meeting, so there could be some big moves to be had there. It goes some way to potentially, it might go some way to potentially answer the question, have we put in a top in euro dollar at 120? If we see a breakdown this week below 117, that could be our question answered there. Obviously, we're still seeing record highs in US stocks. We had a bit of a wobble last week on Thursday, which was pretty interesting, but markets quickly turned around again. So we'll have a look at that wobble, how things have materialized. Obviously, that's on the equities front. Got a lot of earnings out this week as well. I'm not going to go into specific on the earnings, but we do have some special reports coming out for those of you who do trade the individual shares on those these big US tech earnings coming out. And of course, we'll look at the state of play in commodity markets. Anytime, if you have a question, certainly feel free to shoot it through to me. I'm assuming that everyone's probably had a chance to look at the risk warning at this stage in the game, so I'm going to jump over to the charting platform. Oh, there's me looking up Microsoft shares. Right, so typically the format here is I'll start with the FX markets, move through to indices, then commodities. But again, anyone has any questions, certainly let me know. So this is the euro on a daily candlestick chart basis. Let's zoom up again to the weekly chart just to help pose that question again. Is this level here, 120, the top? Doesn't look very top-like when you look on a weekly chart, a little bit more so on the daily chart, but potentially what we're dealing with here is a head and shoulders pattern, with the head being around the 120.50 mark, and then 118.50 calling the kind of left and right shoulders, potentially having put in at the end of last week. If this is a head and shoulders, well then obviously typically you project the height of the pattern downwards, and that would take us pretty closely down towards that 113 mark here, which is where we saw the big spike high back in the tail end of last year. Would take us down to sort of those kind of levels, and somewhere a bit inside the top of the range. Now potentially 115 might do it, if we're just getting a little bit of shakeout of some of the weak longs, get a little push through support, and then people come in at kind of more like the solid top of the former range here, because really 117 is more like kind of the spike highs here. But the form, lots of opens and closes of weekly candles were down more at like 114.50 to 115. So both of those two levels would be key to watch if we get a breakdown. Do we get the breakdown? Well, yeah, like I said, probably depends on this week's ECB meeting. It's increasingly looking like we might. If I go down to the daily chart, to me this was looking quite encouraging in terms of a push higher, where we had a little breakthrough this declining trend line off the 117 level. We had a big move. We got above the 50 on the RSI. We kind of stalled out at the 50-day moving average. We came down again, put a little kind of tweezer bottom in here on the daily chart, and then pushed through to the top side. It was all looking quite good here, but then obviously, as the chart shows, we rolled over. And I think this weakness from last week, I believe that was the Friday, when we just completely fell down here and closed at the lows of the day, and now we're pushing into the lows of this tweezer bottom. It looks a bit dubious, and the market's looking pretty soft, and you can see obviously that we were in a strong trending up market. Now the 20-day moving average at least has rolled over and is pointing downwards now. So we're below the 50 RSI level again, actually taking out a new RSI low level. So to me this is starting to look like we're about to break down. And then, you know, if we are, depends if we put any little short-term highs in the meantime, but that 118 1865, I suppose, but 1850, if you're calling it round numbers, is probably the critical resistance as to whether this market does continue to go down or not. Let's switch gears to cable. Now, again, the typically the US dollar is the driving factor for all these pairs, right? So if euro's rolling over, there's a good chance the cable rolls over. There's a good chance the dollar yen rallies. If that dollar is the driving force, it's not always, but obviously it is the world reserve currency. I will try to tackle Euro Aussie, Simon. Yep, maybe I'll get to that at the end of the sort of regular analysis, if that's all right by you. In terms of cable, so obviously we're pointing downwards on a daily candlestick chart. We've just had a bullish bounce off the 131 level. So this kind of pin bar, hammer looking pattern from Friday was encouraging. We're rolling over a bit here from the little short-term swing high and the moving average. But we did put in, basically, as long as today holds above Friday's low, we have put in a higher low here, excluding this little sharp rebound here. So if I go onto the weekly basis, again we're above the 50 level on the RSI on a weekly basis. We're above this rising trend line. We're above the 20-week moving average. So it's all basically we're coming down into a value area on the weekly chart. So whether that value area just gives up the ghost and we turn into a downtrend, or whether in fact we do get a rebound to the top side is obviously open to question, but this is the area you start looking for value for the short-term downtrend to end and this longer-term uptrend to resume. That's what we're kind of looking for. What I would like to see, and obviously you can see it's not happening at the moment, is for us to take out this resistance here, get above the 20-day moving average, having put in a lower low, and then looking more toward making higher highs and pushing up to 133 again. That would look a lot more encouraging. We just haven't quite got to that point yet. So, I don't like to trade against the daily trend, and at the moment I think we're still trading to the downside. We put in a big sharp drop, we pulled back 50%, we've dropped quite heavily from there. We just haven't taken out the lows yet, but we still could. We certainly could still drop though to there. How low do we get past these lows? Well, I'm still looking at this rising longer-term trend line, and so maybe just a retest of 130 is on the card still. And that's very much the same thing I said in last week's webinar. We certainly could get a test down at those levels. I want some push above 132.20-ish to suggest to me that we're not going to get down there. So dollar yen, certainly one of the more encouraging looking pairs. Obviously we had the Japanese election over the weekend, and Prime Minister Abe got in fairly comfortably despite signs of a bit of competition from the Tokyo mayor, as we mentioned in a couple of week ahead videos. So net result, we've had a big bullish engulfing candlestick on dollar yen, i.e. a bunch of yen weakness coming through here, because it looks like Abenomics, basically the program which involves printing lots of yen, is going to continue for the foreseeable future. So obviously this bullish engulfing pattern happened last week before the result, but obviously that's the market kind of pricing in what they expect. So we had a small dip, but we're, as you can see, we've kind of broken out through this downsloping trend line on the RSI on the weekly chart, and we're kind of approaching, if that's any sign of what's to come, we're sort of approaching a similar sort of breakout here in price, and we're basically consolidating above that breakout at the moment. To me, I wouldn't be surprised if we dip down through that trend line again. It's not the most reliable looking thing, but I'm thinking that maybe 113 is a round number that attracts some buying interest if we were to get down there. You can see we're sort of struggling around since post-election. Sunday we gapped higher after the result, but we're kind of trying to close the gap at the moment. Maybe all we do is close the gap down at 113.50 and then push on higher from there. either way, what I would say to you is that it's a encouraging looking candlestick from last week, and I would expect the market to hold up above the lows of last week's candle. You know, the risks to that scenario, of course, is that we're still pretty much in a range trading scenario, and so, you know, the risk is you get a similar situation as you had down here, where, you know, we basically did push down, but it ended up being a false breakout. So that's why it's always good to have those weekly candles as a kind of guiding point. But keep in mind, we closed at the highs of the week last week. So potential, you know, watch out at 114.50. You can even wait for confirmation of a break of that area. But there's a series of resistance up here. It just looks to me like we finally got a bit of momentum going here, and we can actually break. Maybe it looks more like a topside break at this point in time than it does a a break to the downside. Let's switch gears to Euro Sterling. A bit heavily zoomed in there. So obviously a couple of big rejections from the 90 level here, and so that's what I've been saying is that it seems like this was a pretty dramatic move to the downside. We've just had a correction of that large downside move, and the combination of a 50% retracement and the 90 level points to lower prices. Now we did see a nice breakdown, but basically price held the 20-day moving average, and we got a surprisingly big rebound up to the 90 level again. But to me, this looks like a pretty successful retest, and it looks like we're going to dip through the 50 level finally and hold it below there in the RSI, and hold that 90 level. And you know, we're not kind of into fresh downtrend territory just yet. That below 87.50 is what we need for that, but it does look like a retest of 87.50 looks quite likely at this point. Keep in mind the RSI, the moving average is still pointing higher, and we're still kind of chopping around the 50. The trend is not certain by any extent, but you know, there's a good chance of a rebound off the moving average, but maybe just look for you know, 89.50 or some sort of 50% retracement of this down leg from last week, maybe for this down move to continue. And just putting that all into context, you know, obviously the kind of overarching thesis and why we had that big drop down is because then potentially there's a bit of a double top happening here at 92.50. So let's have a look at that Euro Aussie. I'll search for that here. Haven't got it up as we speak. There we go. Load up my little template. So starting with the idea of a sort of top-down analysis type approach, we'll obviously face some pretty stiff resistance in and around 152. That's what's capping prices at the moment. So to feel really like we're onto something good here in the Aussie, you'd want to be taking out 152 really. We're still in uptrend territory, but it's starting to stall out, and it looks to me like maybe we're going to get a break of this 20-week moving average because it's flattened out, and it looks like we may just come and test the bottom of the range, which, you know, if you're being aggressive, would be down here at 144, but you know, maybe more like 146. You know, if you're just calling this was an uptrend, but now we're consolidating the uptrend, then it seems quite likely to me with these three rejections of 152 that we come down and test 146. Looks more like a sideways scenario now based on that moving average than it does a trend. And then maybe just look to the daily chart for some proof of the pudding that that's happening. This was obviously the rejection of that longer term resistance here. So if you add in maybe a 50% retracement, we haven't quite hit that yet. So it depends if you want to be fussy and wait for a bigger retracement, or take that big down move and a little pullback here as a better entry on that trend rolling over. Also, obviously, note here that we're below the 20-day moving average, and we're dropping below the 50. The two often happen together. You do have some kind of ongoing support on the RSI here. I don't always use this, but when it's obvious, there's the 50 level, which is kind of the standard thing you'd use. But if you see a pretty consistent level like 46 in this case holding a support, maybe wait for that to roll over before you get a bit more encouraged that actually this market is turning down towards the bottom of the range. Hope that helps. So let's get back. We'll skip now from Forex to the indices. We'll start with the FTSE. I have to say this did catch me off guard last week. I thought we might be in for something a bit more serious. This was the sell-off I was referring to. So that was on the Thursday, but we ended up just closing right up at the highs of the day. Still closed down according to our charts, but you certainly can't categorize that as a dramatic sell-off. It wasn't even a big move in the first place, and it didn't extend through the lows, and we just rebounded straight back. So still looking pretty strong. This 75.20 really has been the bottom of this very tight price range that we've been in. And again here I was looking for maybe some evidence that this consolidation's over, but you're not really getting it. And I basically really should have removed this because I don't think it's not holding up too well. You could say that momentum's given up and maybe price is about to follow. Just betting against these bullish market moves is consistently a mistake. So obviously it's 7550 is the big resistance level that we're trying to get through, making pretty hard work of it. But apart from that little jolt on Thursday, no real sign that the market's wanting to sell off yet. So we're in a price range. If you feel so inclined, if you're a keen trader of the FTSE, the main trend at the moment seems to be buying and selling at the bottom end of these range. But it's been going a while, so I'd expect to break out one way or the other. We had a little false move to the downside earlier today, and we're pushing to the top side. The trend is ultimately the trend is higher, so you would expect that it's going to be a top side rather than downside break. Oh, just had a question what the dots are. Yeah, I added it as a demonstration in the. So I did a webinar a month or so ago about some ways to determine the trend. And I just added these dots to signify swing highs and swing lows to demonstrate higher lows and an uptrend, lower lows, and a downtrend. And I just thought they were a useful visual way to display it, and I actually just kept it on. So they're fractals basically. If you want to add them onto your chart, just go indicators and then other, and then fractals. It's those little beasts there. And I just keep the default settings. What they're basically doing is showing you a candle which is either lower, has the lowest low of two candles to the left and right, or a candle with the highest high with two candles to the left and right. So basically showing you a swing. And as you can see at the moment, higher low, higher low, higher high, higher high. So it's an uptrend at the moment based on the daily chart. And then on the weekly chart, not as clear. You can sort of say that it's really lower low, but then higher high. It's kind of chopping around, characteristic of a range. Something that's not in a range by any stretch of the imagination is Wall Street. It's just this trend just won't give up. So that was the sell-off again on Thursday, but we basically just found support at the round number of 23,000 and just shot up again and closed at the opening of the day, so basically closed flat after a big sell-off, and that was just a good bullish indication that trend was going to resume, and we did indeed push higher again on Friday. So it's been a long while since we even tested the 20-day moving average. So a word to the wise, I would say that once we do get down to this 20-day moving average, the next time we test it, it's probably not going to hold because the market's just so overbought at the moment. It's probably going to end up being a larger correction once it does happen. But betting on it happening is proving pretty futile. So in these kind of conditions, I've mentioned it before, there's such minimal pullbacks, and actually buying breaks of highs is the name of the game at the moment. And then obviously if it takes out the low of the day, then there's a little symbol that the really kind of overzealous bull trend that we're in at the moment is maybe coming to an end. So just looking at, with the benefit of hindsight, obviously, if you look at this little run here where we just broke high today, broke high the day, broke high the day, and then took out the low of the day down on this one, and then maybe you're less aggressive, and then for 3 days in a row it starts taking out the highs of the day each day, and again you just do breaks of the day, high of the day. It pulls back here but doesn't take out the previous day's low. Same here. Same here, it pulls back just a tiny bit, doesn't take out the previous day's low, and so on and so forth. Benefit of hindsight, that's been working, but just be wary, particularly over the last couple, 2-3 days. We've had some really strong moves. Germany 30, you're still struggling around this 13,000 mark. It's quite reminiscent of the FTSE actually. Both have been going pretty sideways. And it looks to me at the moment like we're just looks more like accumulation than distribution. It looks more like we're just waiting for the market to come out of these overbought territory. So it did briefly dip below the 70 mark, did briefly dip below 13,000 again on Thursday last week, but we're back above there. So I'd assume that the uptrend is going to continue and we see some more record highs here. I should note that the the 20-week moving average is pretty flat, so I don't really see any evidence of it yet. But if we see 12,900 getting taken out in a pretty potent way on a daily basis, that would be maybe some indication to suggest that we're not going to get an immediate push to more records, maybe a retest of the 20-week moving average in the middle of the range, or indeed a retest at the bottom of the range is more on the cards. Now switching gears to gold. Oftentimes a very tricky market to trade, and it's been pretty all over the place. If you just look at this weekly chart, the trends are quite hard to discern. Overall, if you're looking at the 50 RSI, and if you're looking at the 20-week moving average, it's been generally pointing to the top side with occasional corrections that see the price push below it. So it's a cautious uptrend, but obviously last week's price action didn't look too good. It could be impacted by this week's ECB meeting, in that what the ECB do as far as tapering QE tells us a good amount about the general direction of printing money globally by central banks, which has been a reason for why gold pushed so high in the first place, and a reason why it hasn't been able to since is that it was always sensed that this was going to be the eventual result, was that no more money could be printed. Short term is obviously often a function of what the dollar's doing. We saw dollar yen rallying, euro dollar rolling over, cable a bit less certain, but all those point to a bit of dollar strength at the moment, and dollar strength generally means gold weakness. So the fact that we haven't really been able to solidly hold 1300, and that we tried a little rally through 1300 and basically stalled out right at 1300 last week and turned lower, and now we're pushing into the 20-week moving average, looks to me soft. So I'd be more inclined to be looking, and again we had a bullish engulfing last week, completely erased it the next day, and now we're through the lows of it. So if you have a strong candle pattern, and then it gets reversed in the next couple of days, that in itself is quite a strong pattern, obviously in the opposite direction. Daily, the 20-week moving average is pointing down below the 50 RSI. It looks quite bearish. The fact that 1300 hasn't held, we're still below that. We're back below the 20-day moving average after having tried to push above it. It all, as I said, it all looks quite soft. Immediate target would just be the low there around 1260 odd, but I think there's a pretty good chance that again pulling out to the weekly basis, you can see that we've got pretty solid support here at the sort of basically just above 1200. So we could be in the process of about to give up $80. So watch out for gold. Potentially some big moves to the downside coming up because this uptrend looks like it's faltering. Brent is looking quite reliable. Just that broken trend line that we mentioned a few weeks ago still looks like the key factor. We've stalled at those highs as you know, as you might expect. It, you know, is kind of key highs of the year. So that basically 59, I suppose, is what we're trying to get through here in Brent. But we had a bullish engulfing the week before last. We held above the short-term broken trend line, which I'll show you on the daily chart last week. But we did kind of stall a bit with a kind of doji-like looking pattern. But the moving averages are all pointing generally in the right direction. We're just making a bit of hard work of this this push to the top side. I've just had a request for the Nasdaq. Yep, I could certainly have a look at that, Roland. We'll have a look at the Nasdaq, and then we'll probably call it a day after that. Let's see. Can I actually type in Nasdaq? Oh, look how clever that is. I type in Nasdaq, it brings up US Tech 100. Do I have that on there anyway? Actually, I often do. Let's just double check. Yeah, good. Obviously, quite relevant to look at the Nasdaq with some big earnings coming out this week and next. You know, if you prefer playing the indices rather than the specific earnings, this would be the one. So looks very similar to shares of Microsoft or shares of you know, Facebook and Amazon, just firing to the top side with a really rapid looking trend. You know, I think if we get any kind of pullbacks towards the 590 to basically 6,000 level, that would be just resistance turning into support, would make sense. We're supported quite well. This has been working quite well, the 20-week moving average. So if we get a close below there on the week, that would be some indication of weakness, but certainly isn't any evidence of that yet. We've basically just paused last week. Maybe, you know, maybe we're waiting for these earnings to come out before we can again make further upside progress. If there are some earnings disappointments, it's still a bull market, so the earnings disappointments could actually be a good result from the standpoint that you know, provides you a dip buying opportunity. You know, it's difficult at the moment because obviously the market's at its highs. So yeah, again, you can see Thursday's sell-off there. Hasn't performed as well as the other, like the Dow, where we had that sell-off and then we pushed straight up into new highs again. But again, maybe that's just a little bit of reticence about these earnings. So you might have some opportunity for a bit of catch-up with the Dow if these earnings look decent. Twitter's earnings, I'd say, you know, most expectations they're not going to be too hot. But the others, Amazon, well, if you're looking for growth, it's probably good. Revenue is probably going to be good, but but profitability might be a bit lacking there. So, you know, maybe this week's earnings aren't going to be as powerful as next week's. We've also got, we do have Apple and Facebook next week, so maybe that makes some sense in the context of these moves. Overall, though, just, you know, it's an uptrend, so you know, potentially this little reversal here pointing to just a break through these short-term highs at 6124. But I'm going to call it a day there, I think, chaps. Thank you very much for attending today. Good luck with trading this week, and I will see you at the same time next Monday. Cheers, Jasper signing out.